baby. Let's freaking go. I've been waiting so long. You don't even know how long it's been. Well, I'm sure you have probably a month and a half. Since we've been able to have a nice full suite of earnings in a week, it's beautiful. We love seeing it. Earnings week's kicking off. Really, earnings season's kicking off, and I'm excited for it. Really excited for it. So we got a lot of great companies this week. I'll be giving you some insight on ones to look at, ones I'm looking at, and we'll see what happens. So let's go ahead and start this bad boy out. I got 3 stocks I'm really looking at this week. Definitely a couple more that are on my radar, but nothing I'm necessarily crazy about. Let's just go ahead and go for it, right? Monday, we're starting before open with none other than Tractor Supply Company. Not a company I follow too much. Given really the nature of the industry right now, not something that's necessarily heavily impacted due to current environment, how the market is right now. So not sure what to expect from them. Pretty basic overall. Same with AutoNation here. Prologis, CM, Bank of Marin. You will see plenty of financials to be had this week, if you weren't aware. Typically, the majority of the financials report the first week as earnings season kicks off, and you'll see plenty of them to be had here. Obviously, some of the banks reported last week and more this week. After close, IBM, definitely what I'm looking at, obviously, because it's a position of mine, but very steady company. Nothing super significant as far as what to expect on the earnings. I just like the company, so I take a peek at the earnings. I'm a shareholder. You got to look at the earnings. No major insights. I really think this is a business that isn't overall really changed by anything going on here. Obviously, we want to talk about cloud and obviously AI with IBM Watson. Those are the main data points we talk about with this company right now. Other than that, the core business is still pretty steady. Steel Dynamics, PPG, Crown, JB Hunt, Zions Bank Corp, Wintrust Financials, FNB Corporation. I mean, we got a lot of these financials here. First Bank. I mean, it's Financial City. We've seen some pretty good numbers last week from the big banks, the biggest of the big banks. From some of the local chains I've seen, there's been numbers that are hit or miss. Most banks overall, though, have shown they've been well raised in terms of cash levels. They got plenty of cash. They've passed the stress test, and they're able to continue doing what they're doing, raise dividends even, and offer share buybacks now because they've positioned themselves so well. So some of these more local ones, it'll be interesting to see what they're able to pull off. So Tuesday before open, we got more financials. We got Ally. Halliburton after them, Philip Morris. We talk about it every time, but this is a company in a dying industry. I like to say dying. We all know smoking is going to linger forever. It really will. People always will. So they've had to make some new investments to get into more of hip and trendy topics such as e-cigarettes, but overall, not a company I would touch, with a 10-foot pole, just being in the fact that their main industry has been declining so rapidly over the last 10, 15 years. Wouldn't touch it. Key Bank, more financials, baby. Manpower Group. I do know someone who works there, but not sure about the core business, what it's looking like. Travelers Insurance. Insurance companies, again, they've been very similar. Nothing crazy to expect out of them. HCA, Citizens Financial, Iridium Everywhere. Not really a company I'm familiar with, so it's probably one of the smaller ones. I need to look into that bad boy. I'll look into that for you. Don't worry. And Silvergate. After close, it's a focus stock. It's Netflix, okay? We got to talk about it. The stock's had a pretty decent run from the last year for many good reasons, right? This is a stock that was heavily, a company as a whole that was heavily impacted by last year in a very, very positive way. During lockdown, people were forced to stay inside, and they watched a lot of content. So what I can tell you about Netflix, if you don't know, they'll typically release every single week. They'll give you there's streaming minutes watched that's released, which is pretty crazy to see how they get that data. I'd like to know who's presenting that data to them. But from what you see, it is pretty darn crazy because Netflix is usually the leader in that list. And it's very rarely with new series because Netflix really struggles on new content. That's their main struggle. That's why I personally would not consider an investment in this company right now. New content is at a terrible level for this company. They're just not producing much. And they're not producing, I think they're producing plenty, but it's just kind of garbage. They're producing a lot of trash. And their whole premise as a whole is content being, king. How many shows they have. There's a lot of garbage on their platform, and I'm sure a lot of people know that when you're scrolling through, it might take you 8 hours to find something to watch because a lot of people spend more time scrolling than they do watching on Netflix. It's not a lie. I mean, I know you have the exact same feeling as I do on that because we all do it. So they really struggle on original content. Need to get better on that, big time. So the only thing holding them down right now is series that they've laid claim to, that they purchased from traditional cable companies. It's crazy. I mean their main shows are old sitcoms that have been popular since the 90s. It's weird to see how that works, but they're usually at least 5 of the 10 top streamed minutes come from Netflix. So I don't have a concern necessarily with that. I do think they are facing a very tough comp year. Because they were able to pretty easily add subscribers last year. It's going to take a lot more to add them this year because of the fact that they got to produce content to keep people interested. If they don't, people aren't going to stay subscribed. Last year they did just because they had nothing else to do. This year they're going to have to prove that they can keep people on. You saw in 2019, they had a terrible year in which they lost subscribers, right? Terrible quarter, I should say. If we see anything like that, this stock's going to take a massive, massive hit. Just be cognizant of that. But they're expected an EPS line of $3.15 compared to $1.59 of a year ago. Not sure what that looks like. Obviously, there's a lot of money that goes into producing content for them. I don't know what that process has looked like and how much they've spent on new content. So I can't tell you what this EPS line is really going to look like. I don't personally think they'd hit $3.15. The only way they would is if they didn't produce much this quarter at all, which I could see being possible. But not sure what that looks like. Overall revenue estimate coming in at $7.32 billion. It's up 20% year over year, which is quite a leap. It's quite a leap. I'm just gonna be honest. Personally, I don't think it's a number they hit, $7.32 billion. I don't think they hit that number. If they do, I'd be mighty impressed. But overall, I just don't think they're in the position where they're at right now that they're adding that many subscribers to be able to get to that point. I don't think it's there. I really don't, especially off their lowball estimates of subscriber gain that they posted on their last earnings. Just not seeing it happen. Don't expect it for them. But after them, we have Johnston. Skipping ahead to Wednesday. I'm excited. Wednesday's got some good ones. United, Chipotle. Everyone loves Chipotle. Would like to see what these restaurants do now, or fast food chains, I guess would be. They're technically restaurants. What they do now that we're starting to open the indoor seating. Would like to see what that does to numbers. Should be better. Obviously, last year was actually pretty rough for these companies. Indoor should be able to help them produce more business. Intuitive Surgical, also a company really, really worth focusing on this year and next year, as those elective surgeries are becoming a lot more plausible, where they weren't last year when hospitals were reserved, for COVID patients. Now you have Intuitive Surgical here, which helps make machinery for elective surgeries for the most part. I'd like to see what they're able to do here in terms of machines sold. I'll see if hospitals are willing to purchase that. I don't know what that looks like. We'll see. Sleep number after them. Comfortable mattresses. I mean, never partaken in the product, but obviously they have put a lot into marketing. Curious if that shows up on the other end for them in terms of revenue. If people are spending all that. People are doing a lot of home improvement lately. They really are. They're buying a lot of furniture. They're buying a lot of outdoor stuff. I'm not surprised if people don't invest in a better mattress. Will they go all the way to Sleep Number? Don't know. We'll have to look at that. CN, 4-star, AAR, Qualtrics, and Interactive Brokers. Really the first of the brokerages to report. We'll see what that looks like. Honestly, it's worth looking at. Wednesday before open, we have Coca-Cola. Obviously, I would refer you to Pepsi's earnings last week. Did a video on that, but we saw some good numbers. Obviously, pretty well softball estimates, just due to the fact that they were facing some easy numbers. Because the majority of the restaurant portion in this quarter of last year was not functioning, right? As all restaurants were shut down nationwide, they weren't making any business selling soda syrups to restaurants. So, which is actually a decent portion of the revenue. You wouldn't imagine until last year how much of that revenue was made via the restaurant segment, and they're able to boost that now. So I'm curious to see. Obviously, should be an easy comp year. So we'll see what that looks like for them. They don't have the advantage of the snacking industry like Pepsi did, but that made Pepsi's comps harder in my opinion. Now Coca-Cola easier because they're gaining that restaurant segment back. So let's look at that. Well, I'm curious. And obviously organic growth was huge there too. Johnson & Johnson, they're going to give numbers on vaccine sales for sure. Definitely a big core of their business. Overall, stock stays steady typically, regardless of the process. I don't know. Not sure what to say for Johnson & Johnson. It's a very steady company. I mean, no matter what, they show that they've been selling vaccines like bonkers. It doesn't really make the stock go up that much. It's a nice, steady, hold forever stock for sure. Their other segments, they did all right. I mean, they've been consistently doing all right through last year. Pretty rough allergy season, in my opinion. I'm not sure if that's countrywide or if that's just here, but we've been having some rough allergy season, so we can see the medication segment. We'll see what it looks like. Verizon, after them, Verizon, good company. See what those numbers do. Wouldn't pay for their service ever because it's not worth the price that they charge, but what can I say? ASML, Harley-Davidson, motorcycles, steady. I think it's a really steady business, but similar to what you saw with, Winnebago last year. I think people are more purchasing these splurge purchases, really more as of late. Harley-Davidson could be one of those. I don't know. I personally wouldn't because why would you? Why would you buy a motorcycle? NASDAQ, Seagate, make a lot of products, obviously tech-based, from hard drives onward. Good company. Really good company, all things considered. Real good company. Anthem, Travel Zoo, and Baker Hughes. After closing of Texas Instrument, really steady company too. Nothing crazy with their business there. Whirlpool, most known for appliances. Part of the home improvement craze for sure is appliances, so it's been good for them. Kinder Morgan, CSX, One Main Financial, Crown Castle, Tenet Health, Discover, as we get into more of the credit-based financials. I'm curious to see what that looks like. Are people spending a lot more on credit? I'd be willing to say probably a decent amount was spent on credit. Expecting good numbers out of them, actually. And Covenant. Thursday, before open, we have Cliffs. We've got AT&T in here, which I did put as a focus stock, but these estimates I really don't believe are right. I'll just be honest with you. So this will be still including their core businesses before they sold off with Warner Media. Estimated EPS line of 79 cents and a revenue estimate of $42.6 billion, up 3.8%. That number is going to cut quite a bit, obviously, in this full year number is going to cut quite a bit as we see that shift in their business. So I'm curious to see what that looks like, but it shouldn't be part of this quarter, I don't believe. So we should look at pretty regular numbers still for this quarter. So keep that in mind, but I'm more of looking at this stock simply because of some of the announcements. This is going to be a huge quarter for announcements and words from the CEO and CFO, really. But this is going to be huge for this company. They're going to need to make some great announcements. American Airlines, softball estimates. I mean, we're talking about you're putting Vlad Jr. right now on a women's softball field taking slow pitch softball. That's what American Airlines is doing right now. It's the most softball easy hit it out of the park. I mean, I could probably, I have smacked it out of the park before in the women's field, but anyone could do it, right? I mean, this is going to be but we're talking Vlad Jr. level, right? This guy's going to crank it 450 foot on the slow pitch ball because he just does, okay? That's what you should expect out of American Airlines because it's the easiest comps I could ever imagine. A business that was completely shut down over last quarter or last year's quarter. This should be incredible for him. Even though flight's still relatively cheap, should be an incredible quarter for him. Next quarter, pretty nice too. But this one should be prime real estate, baby. It's free real estate. New core, D.R. Horton, Southwest again. We're talking Vlad Jr. level. Could bring back none other than Prince Fielder. It could still be cranking him. All to this day. You never know. Who else is hitting him? Shohei Ohtani could be cranking him too. That could be Southwest for me. But at least Shohei Ohtani's got a little bit more diversity than Southwest. He can go both ways, pitching and hitting. But Southwest only has one business. It's dirty, baby. Sorry. Abbott, steady, consistent drug maker, nothing crazy. Crocs, you gotta love looking at Crocs. A lot of people buying Crocs lately. I'm telling you, millennials love their Crocs. They really do. They love Crocs. What's going on here? I don't own a pair, but maybe I will one day. Very comfy, surprisingly. Not good for practical use, but they are comfy, actually. Alaska Airlines. Again, should be softball. After close, we have Intel. Nothing crazy to report there. Cloud services, obviously majority focus there. Snapchat, I have them as a focus stock too. Why is that? Well, should be a freaking easy quarter. This will be a darn easy quarter. At this point, we're maybe putting Nolan Arenado at the plate. Make it a little bit more fair, but he's still going to be cranking a lot of homers. EPS estimate only at -1 cent. Really would like to see that go into the profitability standpoint. Supposedly for the full year they will be, but I don't know how this quarter wouldn't be. We'll see what that looks like. But obviously the revenue line is what's going to be easy to beat here. $844.98 million compared to $439. It's a 92% increase expected. I expect them to probably grow over 100%. Reason being that ad rates have come back so strong from where they were in this time period last year. It should be very, very easy to beat. So I'd expect good numbers. Twitter, I know they're going to be struggling with user growth. They will. Snapchat, I don't think is going to face that yet. Twitter will. I think there's been a lot of contentious issues on Twitter which have led people to leave the platform. Curious what that looks like. Skechers, they make some nice jogging shoes for children, but I would never wear Skechers because they're for kids. Eat that. Samuel Adams with Capital One. Yeah, Capital One out here. More credit, baby. What's that bad boy? SVB Financial Group. That's right. Del Taco. Not personally one that I've partaken in. I've heard it's the bottom tier of quality food, but some people enjoy it, so don't really have them around here. VeriSign and Celanese. Friday before open, we have American Express. Get into the credit aspect yet again. Schlumberger, Next Era Energy, Honeywell, consistent company. Kimberly-Clark, more drug makers, baby. Been doing consistent numbers. Regions Bank, Gentex, Next Era Energy Partners, First Bank Corp, different from First Bank. Let's get it clear, gentlemen. And Savista Bank. That's what I got for you this week. Hope you enjoyed that. You better watch this video. Smack the crap out of the likes on it. I love you.